Could have applied it to that one. Oh, what just happened? What did I miss?
Laughing at Britta, she was just so stoic for a moment.
She's like,
I didn't know what to do.
We live now.
all right, we are officially live on Facebook. Let me go ahead and share this wonderful occasion with everyone. It's funny because it picks up with you laughing.
Britta laughing?
No, with you laughing.
Oh.
Yeah.
Hilarious.
All right, I'm going to share.
Shout out to Kamari. I see you. Hey, Linda, how you doing?
I was doing myself.
Oh wait, let me turn on my sound down. I'd be having 3 devices at one time.
Yeah, we can't be doing that today. But today we're gonna get into some heat though, so I'm excited. I am super duper excited.
I'm excited too. What did she say? Oh, friend! You see what I got?
Wow. There you guys go.
That's so funny.
Oh, that's so funny.
It's so crazy because on my feed, I'm literally bombarded with like all these like lives.
Mm-hmm.
Like all these live protests, which by the way, shout out to all the folks that are out there pounding the pavement, you know, definitely spreading the message.
Mad respect.
Right.
Wait, is it okay? There it goes. Share. We live.
Shared with mine.
I share with mine.
Hey. Sweet. So we're just gonna give people some time. I can't play any music clearly because Facebook got me last time.
You're supposed to have a theme song.
Yeah, I know, right? But you know, we weren't really feeling it. So we're working on it. We're working on it. You know,
Kamari's working on the theme song, right, Kamari?
I'm not rapping, y'all. That's just not my huh?
Britta, I'm having a hard time hearing you.
Really?
Yeah, maybe you can turn up your volume on your input volume up.
Let's see.
That's actually better than it was before.
It was probably just because she was a little bit further from the mic.
Oh, okay.
I just burning with these gems that I'm gonna possibly drop today. Oh, she went heads. Britta, are you a gamer by any chance?
No. I'm just trying to make sure you guys can hear me.
Oh, that's really good.
I was gonna say because you got them gamer headphones on. Like, I mean, I was like, why did you see you in 2K or something? I don't know.
No. That's my niece though. But
I was gonna say, let me find out.
This is for work when I gotta be professional.
Nice.
Kamari said,
Did Mark get a fresh cut? Yes, he did. Yes, we are out of the forest.
that's hilarious. I'm still there and whatever.
Nah, man, it was looking pretty rough, man. I started like, I feel like I was losing it. I was like, yo, man, I need to get this cut. Something just ain't right. So shout out to my guy Omar out there for definitely hooking me up. Definitely appreciate you.
Shout out to Nene. I see you, Nene.
Oh.
Let's see.
Now you know what you guys got to do. You guys got to let us know where you're coming from, what's going on. We want to make sure that y'all safe, but you know, what city?
Yeah.
Keisha in the building. We got Ranny. Ranny, we're gonna have to talk about one of your companies. So you may not like me later on in this conversation, but you know what? We'll get to that later. But I'm just gonna say, you may want to put your finger on one of the sell buttons to one of those positions. But you know, in the end, we're definitely gonna have a replacement. We always have a good investment opportunity for you. I hope everybody's living well this week. It is officially 5:02. We will get started in 2 minutes, I think. 2 minutes. So, by the way, how's everybody doing over there? Like, you know, Jolene, Miss Black Girl Art World, and Britta, how are you guys doing over there?
Man, just blessed.
Nice.
You know, I'm taking advice from Kamari and staying in joy right now. You know, I'm just airtight. airtight.
Okay.
Centered. Then. Well, that's voguing, but you know what I mean.
I
Yeah.
was gonna say, it was like, is that the Vogue, or I've seen that in multiple different places. Remember the time. Do you remember, girl? Like, are we trying to take it there? Are we trying to get the sands of time going?
Shout out to the new watchers, Latoya Mills. I see you. Shout out to Kevin Kennard. What's up? And Rubel. Wait, no, Rubel. I feel like you've been here before.
Yeah, Rubel is actually one of the folks in whom which it's actually cool. He's my neighbor.
Okay. Oh, he said
That's
across
cool.
the street from Mark. Okay, I
Across
see.
the street.
Let's see. Love you too, Nene. Let's see who else is up in here. Lakeisha.
Hey, all the way from the STL.
Lakeisha be coming through.
Midwest, where you from? Hey, okay,
Hey.
let me stop.
Linda constantly holds it down.
Nice.
Appreciate y'all.
I'm just gonna let you guys know, pay attention today because we are bringing that straight up fire. Like, I think we may be handing out some cheat codes today. Are we handing out cheat codes at all today, or
A few,
just a
Oh,
few?
let me get my paper ready.
Oh wait, what?
Don't play.
Yo, I got my pen and paper ready for
I
that.
may have to get a new Apple Pencil because I think that my dog possibly used it as a chew toy.
Oh, hell no. Better. Oh, I would be scared. It already took long enough for this.
But it was funny because as soon as he saw me, he dropped it and then just walked out the room.
Oh, that's that guiltiness. That's that guilt.
I was like, yo, why are you walking around guilty? All right. I'm going to pass it over to Jolene because she's going to set up the story. So set up the stage. So I fade to black here.
All right, y'all. I'll take it. Hey, what's going on for this afternoon? Today is Trade Talk Tuesday. I am your co-host, Jolene GC. I'm here with our other co-host, Mark Monroe, and our special guest, Britta Madison. So we are going to get into some trades that you can make tomorrow. Okay, so that's the whole point of the show. So get your pen, your paper, whatever you're using to take notes. Let's get it. So before we start, first of all, let's talk about today's numbers. So we have the S&P 500 is up 25 points. Dow closed at 267.63 points. Let's see, NASDAQ was up about a little over 56 points. And shout out to the NASDAQ because they're up by 7% year to date. So that's cool.
Holding it down.
Yeah. And then, in regular, news, we do need to say this because there are some companies that have been making some Black Lives Matter statements, and then some other companies that are straight tripping. So companies that have made some announcements, we have Netflix,
Yep.
we have Apple, Nike, Target, Bank of America, and Nordstrom. So shout out to all those companies. If I missed any, throw them in the comments so we all know. Now, for the other companies that just, I don't know what they're doing.
We're no longer invited to the picnic.
Right.
Yeah.
No cookouts, no barbecues, no nothing. Okay, so we got Wendy's. Wendy's contributed 400, well, their franchisee, excuse me.
The CEO
Yeah.
contributed 400,000 to the Donald Trump campaign.
Right? And then we got Walmart giving 50 profits, 50%. Like, wow. And then, Facebook is already in hot water. The employees are pissed. So, and here we
I
are.
actually had somebody on my LinkedIn today, like they were sharing this profile of a person who quit working at Facebook and then posted an image of his resume. And we're like, well, why did you quit? You should have just stayed there and try to definitely keep up the good fight because we definitely need more allies that are there. And he was just like, well, we tried to do this and that, and just, they weren't hearing it last time. So it's just like, this is the final straw. So.
Yeah, so I would just say, look at these companies potentially for a trade because they're definitely trying to do something. I mean, obviously, I feel like they could do more, but they starting. So,
yeah.
Shout out to all those companies. Then just quickly, sector overview. So, there are 11 sectors, and the top 3: tech, health, and consumer discretionary. Then we have the bottom 3. Mark likes that. Okay, then we have the bottom 3. We have communication services, probably because of Facebook bringing them down. Real estate and energy. So if you're trying to find out like what types of like how to narrow down your search, you can start by looking at different sectors and then looking at the top companies in those sectors or the bottom, depending on if you're looking for a deal or what have you. So with that, let's talk to Britta.
What's up?
What's up, y'all? What's up?
Yeah, we're so happy to have you. You know, Britta has been in the comments from day one. Day one, I think you were on episode 0.
Yeah.
Man, shout out to Kamari for that one. Familosa was coming through and looking out for me because she definitely knew that the conversation for building wealth is something that I like to be a part of. So when Black folks are doing that, that's where I want to be.
Nice.
Awesome. Britta, okay, so talk to us about, like, you know, when did you start investing, and, you know, what are your philosophies about investing? Like, what's like one of your biggest lessons that you've learned since you started?
Yeah, so let's start with the first time I invested. I was actually 10 years old when I first did my investment. I was arguing with my mom and I said, you know what, I'm tired of these shoes. Let me go. Kid you not. So I went and actually I got my own job doing newspaper routes. And with that money, my father actually had me invest in AT&T.
Nice.
So I was buying AT&T, I was buying Singular, but when I was a teenager and got into some trouble with money, I decided to sell my stock. I actually did not get back into buying stock until I went to Costco and started buying through Costco stock, as well as Alibaba and Apple. But I end up, once again, emotions, selling my stock. And it wasn't until 2017 when I actually got serious about building my wealth base and making sure that I buying companies that I truly believed in that would be there for long term. And when I say long term, I'm looking at 15, 20 years from now, just because I want something to pass on to my niece. So that's kind of just very broad overview of my process. I've been building it for at least these 3 years, and my philosophy around building my portfolio is definitely I'm a dividends investor as well as a value investor. So I like buying things on discount because I'm cheap. But but at the same time, I like to make sure that I'm building an income with anything that I buy, because I look at it as an asset. No different than buying a house. I look at ways of how I can build an income out of buying that house. Stocks is the same thing to me.
Well done. Well done.
Awesome. Okay, so let's take a look at, well, not like literally, we're not gonna like literally, but like, let's take a look at what are some of what's in your portfolio right now? Like, what are your, you don't have to say all of them, but like, what are some of your, you know, your top picks in your portfolio?
So if I had to say what's in my portfolio, I wrote down like my top 10, and I was like, all right,
She definitely came with some questions for me today. She's definitely came in with some heat. So.
No. I'm humbled because I truly believe that there's a balance in strategies, and I've done something one way for the past 3 years.
Yeah.
And then of course with the COVID-19, and I'm not gonna lie, I definitely had money in the airlines, and when that took a hit, some of my money went with it. So
are you still in the airlines, or did you?
I am not.
Okay.
I am definitely looking at airlines.
Got up out of there.
Exactly. I pulled what I could and got up out there and repositioned.
Okay.
But I also realized that there's other strategies that I could be using right now to keep building that portfolio and building that fortress of dividend companies I'm looking for. So if I have to say what's in my top 10, I would say definitely AT&T, Exxon, Coca-Cola, Costco, Aflac, Wells Fargo. I also have Walgreens, Intel, AV, and then I have Tyson Foods.
All dividend players.
All dividend players.
Yeah. Okay.
Okay. So now, let me take a little sip right here.
Oh, snaps.
I'm just kidding. I don't even know why I'm being so dramatic. I'm totally kidding. So as you're looking, so you mentioned like you have, this is what I gathered from what you shared. You have a long-term view and you look for value and income.
Yes, ma'am.
Essentially. Okay. And so how did those perspectives change? You mentioned you got out of airlines, but how did those perspectives change? Like, as we like, talk to me about like once March 23rd hit and you saw the dip, like we all did, what, if anything, changed about your strategy?
The small thing that I would say the smallest thing that changed about my strategy is looking at companies that can withstand these kinds of pandemics. For instance, let's look at Coca-Cola. I actually love that company. I actually am still looking to buy that company. The reason why I love Coca-Cola is because one, they're a dividend king. And when I say dividend king, there's a very few companies that have reached that level of consistency of not only paying dividends, but consecutively over 50 years have grown their dividend paying. And I believe Johnson & Johnson is one of them, but Coca-Cola is another one. The other piece about that is that means that they've gone through the Great Depression, they've gone through 9/11, they've gone through the crisis, and they never fudged on paying out their shareholders. And for me, when I look for consistency and wanting to make sure that I'm growing my dividend income, just because I have a average percentage that I always want to hit. And that dividends, I put it back into my portfolio so it can do the compound interest of growth. Companies like Coca-Cola, I look for them to make sure that they're consistently paying that, but are you also consistently throughout these times growing that income to your shareholders? Another one that I looked at, for instance, I have two that's in here. I didn't mention Psycho. Their ticker symbol is SYY. I'm not looking to buy them yet, just because I need them to drop their price. So I'm looking for a dip. I'm looking for a dip just because I want to have that margin of safety that I'm looking for, which is 25%. But once again, they are a company for over 50 years that have paid dividends and grown their dividends income over those years. And that's what I look for during those time frames. So when there was a dip and I got hit, I said, you know what, there's great companies that are selling at a discount. Let me go look for those. And Coca-Cola was one of them. Psycho was another. Exxon was another one, even though they haven't hit those 50 years, they hit 37 years of consistent dividend growth. And another one that, Mark, I believe you mentioned, I actually bought, what was it, Starbucks during that time frame. So it's, once again, the hit was there, but there was a huge opportunity to buy these great companies, mature companies that pay these dividends.
So, quick question. This question is for you, Mark, but now you're getting up. Okay.
All right, I gotta take care of my little kid here.
So Mark, as you're listening, to Britta here about her stock picks, what's coming up for you?
I'm noticing that what she's looking at is each and every single one of these companies that she mentions, which are solid. They all pretty much sit at, when you look at the return on equity, and which most value investors, I think that they typically look at, they're pretty much 50% or higher. I think when we looked at the last ticker SYY, that return on equity is about 62%. When we looked at Coca-Cola, it's at a 55% return on equity. So SYY technically has a better return. I don't know if you're sitting out. I think that, that's, buyer beware, but I think that now is the best time to actually buy that stock because it looks like they're in the process of rebound. But
wait, is that based on a chart analysis?
Based upon a quick chart analysis of what I just did while she was speaking, as well as just doing some quick analysis of PE and looking at what is the company involved into. Of course, we all know SYY, or at SICO, or like we like to call them. They're solid. And especially if value investing is your thing, then each one of these she's nailed 100% on the head. My only question that I would have is that how are you seeing, like, are the returns that you're seeing, are they hitting the key performance metrics that you're looking for? For example, because most of us, when we invest, especially as investors, you're looking to invest for a nest egg to retire. So is it putting you on that growth trajectory strategy plan? And that was a question that I had for you. How are you on that strategy as it pertains to whatever financial goal that you're trying to reach? How does that path look for you?
So I think that's the point, at least what I want to get it across here is that a lot of these companies, when you look at dividend yield, you're going to see some of these companies like a Costco pay you 1%. It's when you actually get in at that discount. Let's say, for instance, Costco. I was buying them when they were $86. Now they're in the 300s. So I use them to go buy other companies that possibly can pay me out a dividend, so that 5 or 6%.
Gotcha.
But it's very rare that you will find these mature companies paying at that type of yield, and that's the problem that I run into, where I do want to grow my portfolio, but that average yield is not shooting me in the direction or in the range that I know that I should be hitting.
Okay.
No different than like the growth that you see for growth companies like an Apple. Even though they've started paying out dividends, they're still growing. And even Microsoft, they're paying out dividends, but they're still growing, and it's amazing to me, and I see them on my list. But it's not the same when you try to hit these other companies. That yield is just not there. And like you've spoken to before, you have to have cash on deck. There really isn't no such thing as I can leverage $1,000. Someone told me that, and I was like looking at them like, yo, I don't even have $1,000. I have $50. So that's what I started with. And I don't want to tell anybody or get them thinking that you can start with $1,000 if you want to do dividends investment. It takes more money than that. At the same time, when someone comes to me and says, hey, if I was to start with dividend investing, what did you do? I always say, look at your finances.
Yeah.
You gotta start doing that 50-30-20 rule, if people are aware of that rule, of what that means. But that's how you actually start being able to grow that. But still, there's other ways to leverage that money and get that to the way that you want, so you can put it back into dividend investing if you want to.
And for the people that don't understand 50-30-20, go ahead and explain it go ahead and drop a gem on the crowd for a second.
Okay, let's drop this. Okay. Boom. No, but it goes back to the idea of your finances. So mindset is first. We all know this, that you got to be able to change your mindsets to truly be able to invest. So when I say 50-30-20, 50% of let's look at your salary, and you break that into categories. Well, 50% should go to the things that you need, like paying your rent, paying your utilities, putting food in your belly, making sure that you have clothes on your back so you can go to work, needs. The 30% goes to the want. So if I want to go to the club and go out, cool, I got that 30% for it. It's that entertainment. But that 20% goes towards savings. And there's different types of savings. It could be your 401k. It could be your portfolio. It could be emergency money. Let's say that you get hit by a train, knock on wood. That's happened to me before. I'm like, hey, yo, it happens. But having money on the side is that 20%. And as you learn where your money is going, you'll realize that, hey, maybe a portion of it is going to the wrong category, but it needs to go into investing. And that's what you use.
Yeah. Solid. See, I'm not the only one out here dropping gems. Look at that.
Let's get into some trades, shall we?
Sure.
Go ahead, Mark. Take it away.
All right. So am I only just dropping like one or two right now? And since we're so early in the segment?
No, I think you could just talk them through, and we need to look at some charts anyway.
I always want to look at some charts. Let me just make
sure.
I'm gonna drop the charts.
You said what?
Drop the charts.
All right, I'll drop a few charts on you guys. So one of my first companies that I'm definitely going to go for, which is going to be a very, very interesting, I think this one's going to be kind of like a little bit controversial, is Boeing. Boeing is one of the companies in which that I'm actually going for. Oh, somebody said, can I talk about Facebook? So should I do that first?
Go ahead and talk about it, because she's been waiting all day.
No, somebody put it in the comments. Somebody put it in the comments.
I told you.
Okay. All right. So, all right. So here's the reason why I still think that Facebook is a good company, solid, is going to make money. For me, I typically invest off of money is the first method to my madness. Second part that comes to that in my investment strategy and whatever is in my portfolio always comes down to social impact. And so given in light as it pertains to current events, I think that this could possibly be something that could, if you're thinking long-term, this could be something that comes back to bite a company like Facebook, especially say, for example, let's just say if you have a 10-year strategy, well, based upon that strategy, the person who's currently in office right now is not going to be there forever. And I sometimes just play the hypothetical game in my mind. So for example, all the things that could go wrong for the company, say for example, go wrong. And so after that, I ask myself, can this company weather that storm? So let's just say, for example, in the things that could go wrong for Facebook, let's say that Joe Biden gets elected and is now president of the United States. Donald Trump's reign is now over. Well, that's that's huge. That's huge, and that could have huge implications for a company like Facebook, given in the sense that that brings back the whole conversation of regulation of Facebook. I think that's one of the very few things in which that could literally just stop the momentum train of what we know for social media. I mean, now don't get me wrong, Facebook's not going to go anywhere as a company, because where do like 3 billion people go, especially if you're trying to reach as a startup or a person that's advertising as a small business or even large company, where do you go? But with that regulation will possibly eat into, say, for example, that ad revenue that they love so much because of the fact that policies will change. And the moment that the United States starts to change those policies, then it becomes open season for other countries, a la, say, for example, the EU, to step on board. And next thing you know, we have ourselves an issue. Now, can they weather it? Yes. Will the stock continuously grow because they will make money? Yes. Do I have other companies in which that can replace that? Yes. And based upon what I see right now, and especially given the cracks in what I'm seeing, I strongly believe that there's going to be a life beyond Facebook as an investor. But if you're thinking about it in the short-term time span, Facebook's still a solid investment, at least over the next 2 years. It's still a solid investment, hands down, because when you think about how much time legislation has to move in order to get there, I mean, they're already going to be moving up another notch the question that everybody's sitting back and asking, hey, are they going to compete with Amazon? But we haven't even heard what Amazon has up its. So, you know, for those who know about Amazon and what they do, you know, you know, like I said, there's other opportunities. Can you find a replacement? Yes. For example, are there other companies out there that are a little bit better? Yeah, like for example, which led me to my first company, which is Boeing, because Boeing, that stock has been beaten down significantly and rightfully so. Is the pain over? In my knowledge, I mean, they could take a few, you know, they may take a few jabs here and there, but when you think about the run-up though opportunity of what a company like a Boeing has over, let's say, the next 4 to 10 years, especially when you're buying the stock at a significant discount. Oh, I guess that means that you want me to go to the charts. Is that what you're saying?
Yeah. Yep. Yeah.
Shout out to Linda. She wanted it too.
Everybody does everybody, I need to know this in the comments. You know, does everybody come like, you know, pull out your Michael Jackson Thriller eating popcorn gif if you need to. But does everybody come here for the charts?
I mean, it is one of the best parts.
Okay. All right. So I guess you get to get it from a mind of a trader / investor. So I guess you know, it makes all the sense in the world. So let's go ahead and pull up Boeing. I think everybody is now seeing it on their screen. So now we have the Boeing company, which was already sitting there on my screen. So whatever. All right. So you know what I like to say? I always typically say when you're thinking about investment, you got to look at the 1 year and typically 5-year chart. But if they give you a 2-year, great. If you want to look at the 10-year, we'll do that too. So here's Boeing starting off in the last year. So if we go from last June to today, here's where we are with Boeing. And when I look at this opportunity, it just screams to me, here's the reason why I see a lot of opportunity with Boeing in the sense that they still have a 10-year backlog. Like, let that sink in for a second. You got guaranteed business, guaranteed revenue for 10 years. And like I've always said before, when you're in the midst of a recession, you typically don't know that you're in the midst of a recession until you're technically coming out of it. I think the only thing that really spawned this year's recession was because of the fact of the severity and the swiftness of coronavirus, a la COVID-19. But outside of that, we were already seeing the cracks as it pertains to things like inflation. We saw that a lot of those unemployment numbers were quite inflated as it pertains to good numbers at that 3.5%. I think that we were, in reality, in retrospect, I think that the American economy was more so closer towards 5%. But let's get back to Boeing. So here we are, we're trading currently today at, let's just say, 153 and some change, or close to 154 if you want to count the after hours. But then we were once trading at, let's say, 344. So when you put that into perspective, that's well over $200 in return per share. And when you compare this, I'll come back to this chart, but when you compare this to, say, for example, a la a Facebook, look at the discount in which that you're buying such a stock. So Facebook is currently trading at $232 per share. Remember, Boeing is trading at 153. They have a beautiful run up, and nothing but, like, I think that a lot of the bad news of what we already know is already baked into this stock. And so pretty much as we get towards, I guarantee you, on the first day that we hear about one vaccine, as soon as we start hearing about more people flying and they have a sound strategy for that, this stock is going higher. And so when we look at, let's say, back to Boeing on a, let's say, 5-year chart, well, that tells you, I mean, yeah. As you can see, they started off, we were pretty much at those lows again, but since they've expanded and since they've done exceedingly well. Now, mind you, this was a brilliant year for them last year. And then this is when we found out about pretty much the 737 Max. I think it's the Max 8. And after that, the stock just kind of like went on a downward trajectory. We've pretty much exhausted anything that was fundamental as it pertains. When you look at it as a stock trader, the stock just broke. And thanks to coronavirus, we're there now. But to give people perspective and how is it that I came to my decision, let me give you a 3-month chart of Boeing. So we're at this point now where we're coming back close to this 180 price point, which if you notice, that's still within the area of resistance and support here. So this is a major point here from the 170 to roughly 180 price target. If we break past that, and I'm not saying really when we break past that, the next path of resistance that we have is really at 231. And then the next resistance that we have is at 262. And then, I mean, that's what I'm saying. You're going to have moments in where you will come back to this 180. So when we go to the 231, it's going to definitely come back down to 180 when it corrects. But then after it corrects and comes back up to this level of resistance again, then the next level that we're going to is 262. And knowing how the stock market typically operates now, you're going to see this stock probably rebound over the next year a lot faster and more rapidly. In my projection, I'm looking at more like a 6 to 9 month where we get to that 180, roughly 200 price target. And then moving from there, pretty much over the next really another 6 to 9 months, you're probably going to be seeing this stock trade close to 230, 250, possibly 300. And
does Boeing pay dividends?
To my knowledge, they once upon a time did. But let me pull that up real quick.
They are, I believe.
I can easily pull that up for you.
Perfect, because you look like a pilot right now.
You know what?
I look like a pilot right
So
now.
That's hilarious.
Just to put it into perspective, yes, they do, and their return on equity is. You ready to hear this? You ready to hear this, Britta?
Yeah, I'm ready.
The return on equity is 1,503%.
Woo!
Now, remember what I was saying. Most of the companies in which that you were looking at was 55 to roughly 62%. 1,500%.
That's money. Let's not even sugarcoat it.
That's pretty much the key crux of our show. That's the ultimate come up right there.
Yeah. So okay, my question for this one, because right now it's at 153.
Mm-hmm.
So if I was to go into this, or somebody else was to go into this and be like, okay, I want to buy this stock or this company.
Mm-hmm.
What's the best way for them to start buying this? Would they just go ahead and just start with that one and?
So I'll give you 3 different trades. So I believe in giving people multiple, opportunities as it pertains to making money, because that's my ultimate goal, is to make you guys, help you guys make money. So if you want to, the standard way of what we know is a person can just literally come in and buy the stock and buy it, pretty much, buy X amount of shares. Randy, this one's for you, just as a heads up. If you're thinking about it, I want you to just put that one on your radar. But yeah, you could easily just come in and just buy the stock outright. Now, if you're saying, hey, I like Boeing, but I don't want to have all the single stock exposure risk, you can go to its ETF, which is the XLI, which that's only $70 per share. I don't know what's going on with this camera. I may have to invest in a Logitech. So if I'm getting all glitchy, I apologize. But where you see XLI right now, you see it trading at pretty much roughly close to $70 a share. If we pull out the 1-year chart, it kind of looks very similar to something else in which that we just saw, correct?
Mm-hmm.
Mm-hmm.
And if you pull out the 5-year chart for it, I mean, clearly, this is a stock that, just like Boeing, it's on a rebound. The differentiation is when you look at XLI, it gives you the exposure of not only just Boeing, which is top dog, but it also gives you Caterpillar, Minnesota Mineral Mining Company, which is also known as 3M, and many other industrial-based companies. So now you have a pretty much well-balanced portfolio. And I know for some of the folks that are out there that are definitely dividend conscious, ETFs are sometimes a good way because they also give a nice dividend, and I think their dividend yields at 2.2%. So, I mean, it's not the greatest, but I mean, it's still pretty good in my book.
So let me ask a question here, just because I've ran into people say, "Hey, buy this on an option." That's one, and then
that was gonna be my next. That was gonna be my.
Okay. all right. Let me be quiet because I'm. No, I'm like, hey, let me ask.
So a lot of people have been asking me about options trading, and I think that next, well, I'm gonna let the head runner of the show literally let me know when it's okay to actually do that show where it's just dedicated towards option, because I know we have a lot of people asking about it. But pretty much options are there for, say, for example, if you want to leverage what you currently have, or if you just don't want to pay, say, for example, the actual full-on price of just buying the stock, and you want to find something that's a little bit, that's, of course, is a bit more riskier. But if you want to make more capital in, say, for example, a shorter period of time, then yes, you can play the option. So what could a person do in this position, especially since they see the stock sitting so low? You could pretty much find a option for either the XLI ETF, or you could just do it for Boeing. And I would always suggest, especially if you're getting started, I would say be careful, because if you don't understand the stock fundamentals, then definitely don't trade on any options. But if you do understand stock fundamentals, let's pull up the options chain for Boeing and see what the cost is. If I'm looking at, let's say, January 2021 calls, which are mighty expensive, but there's that 265, or the, say, for example, the 270. Now you're paying something, you're going to be paying for it up front. So, which means that they got it trading, let's take the 280 call, where it's trading at $2.89 per contract. Remember how you calculate an option? $2.89 times 100, since there's 100 shares in every contract. So that's 289 bucks that you're spending. You can probably, if you got to, let's just play it from the rule of, let's say if you have $1,000 in this situation, divide that by 289. So that typically buys you about 3 contracts, roughly pretty much 300 shares, if you think about it in options world. So you just bought it at, let's say, 280, but then let's say, for example, Boeing goes on that run like we said it would. Probably by the time when you reach that halftime marker, which is around, let's say, I want to say August. So let's say that by August, it comes close to about that $200 marker. Let's say the value of that option goes from $2.80 to roughly $4. $4 times 100 times 3. Now the value is $1,200. So you just made a $200 profit. Not bad. In comparison to, say, for example, if you only buy the stock, let's say it's at 153, and then you do the 1,000 divided by the 153, that buys you 6 shares. So 6 shares plus 6 times, let's say 50. So technically the shares in this point is a better buy. And I just gave you 3 different opportunities, but the better buy is to buy the shares.
Okay. So looking at buying the shares, if that's the best option, one thing that I ran into trying to buy shares is, let's back up for a little bit. So we know that we can buy shares or options straight out with cash. I've also seen people using margin
Mm,
Margin, as in, for those who don't know what that is, it's like
right.
buying with a credit card. So I wanted to understand how you can leverage option margin, but at the same time, the risk that comes with that, just because
Good.
it is like a credit card, and at the same time, there's ways to leverage, but it's just trying to make sure that as a investor, being informed of those opportunities, but also the risks that come with it. Can you speak to that?
Sure, of course. So like she had just mentioned, so let's just put it in real world experience, right? Let's say that you open up an individual brokerage account and you say, okay, hey, I want to start off with $1,000 in this individual brokerage account. Well, what most brokerages, they'll typically allow you, based on if if you're approved to actually be able to invest, they'll typically give you $1,000, or they'll match whatever the cash balance is that you put into the account, and they'll call that the margin. So if you start in with $1,000, and they'll give you, say, for example, $1,000 on margin. So just in case, if you're in the midst of a short-term trade, or in the midst of doing something in the shorter term and you just need to execute really quickly, they'll give that to you. So here's the benefits of, say, for example, margin trading. Let's say, for example, you trade something on pure margin. So you traded this, so you put in $1,000, but you wanted to go a little bit further, and you said, okay, hey, this position costs a little bit more than $1,000, so now I have this margin. So now I can buy something at $1,500 on with the extra that $500 is on margin. So I'll give you the benefits and I'll give you the risk, or I'll give you the benefits and I'll give you the negative. So the benefit is, say, for example, if you do it well and the position works out for you, then pretty much what happens is that you make more money in the process, and then you just pay back what you just pretty much borrowed on margin, which is the $500. I don't think that there's any interest associated anymore to most margin trades. So that's the good. You make more money and you're able to execute a trade when you're pretty much low on funds. Here's the bad. Say, for example, you make a trade and the trade goes completely south versus what you what you said, or what you're going for. Now the brokerage, since you traded on margin, they're going to do a call on that margin. So just as a little tips and trick, cheat code for everybody. Typically, especially if you live on Pacific time, 11 o'clock, from 11 o'clock to roughly 12:15 every day on the stock market, you're seeing margin calls being made, or you're seeing that those calls are being called in by the brokerages. So when you see the volatility spike, the reason why you see that volatility spike is because of the fact that those brokerages are calling in on those investors or traders and saying, hey, do you have this money to be able to cover for this margin? If you don't, then what we're going to do is we're going to cash you out of this position, so that way we can make our money back. Mm-hmm. And so it's pretty much just the brokerage's way. And when they cash you out, if they have to cash you out, then they're also charging you a little something extra because of the fact that you couldn't make the margin. And now they have to, and also they have to do the cover for the commission, as well as, say, for example, anything else. So that's one of the reasons why I highly advise against margin trading. I traded on margin before. It worked out for me in some it just wasn't my day. But yeah, I would say, depending on what your strategy is, and if it's sound and if it's less risky, then it can work for you. But just remember, you're taking credit from, say, for example, the brokerage, in which, I hate to tell you guys, but when you're dealing with brokerages, there's a little hidden secret where, they're also slightly betting against every trade in which that you're making. So they pretty much leverage to the point where, okay, say, for example, if you make this investment, we see X amount of folks that are buying into, say, for example, stock that we know is overbought. We could put a put against, say, for example, the actual sector, or, say, for example, the position itself, so that as the market goes down, we've already hit those retail investors for their commission costs to get into the trade. And then on top of that, we make money as the market goes down. So we're making money there. And then on top of that, if we made them trade off of margin, we get that margin call as well. Hey, don't shoot the messenger. I'm just giving you guys the cheat codes here. So But yeah, so I would just say, like, margin can work for people, and also at the same token it can work against you. But we see the margin, we typically see margin work every day when you see at 11 o'clock, from 11 o'clock, like I said, to 12:15, 12:30. Notice how the market is pretty volatile around that time of day. And that's because of the fact that people are having their margin called in by the brokerage to say, hey, either show us the money or you gotta, pretty much.
Okay.
Yeah. So we got Boeing, which is probably a solid position. You're gonna have to help me out, Jolene, because
Next one, go with Hero.
oh, I need a hero. So for those in who wish that they're into gaming, or like, for example, they understand that the gaming space is just growing at an astronomical rate, and I think that thanks to COVID-19, it definitely still helped a lot of folks, especially like Activision, Blizzard, Electronic Arts, and many others like Take-Two Interactive, Microsoft, Sony. This is only just getting bigger. And where I see it moving forward is that we have this year, we have 2 major consoles that are going to be releasing. And you have a lot of major video games. I think Sony PS5 has 38 titles that are exclusive that are coming out this year, or that are supposed to be coming out between this year and next year. And you can only imagine how many Microsoft has, since both of these different companies have bought out gaming studios as well. So I like Hero because of the fact that not only does it take in American companies, but also, like, say, for example, companies like Tencent, which they do very, very well when it comes to gaming companies. A lot of the games that you probably buy through the App Store are probably Tencent owned. And I just think that, for where I'm looking, it's a pretty new symbol. But just looking at this trajectory, sorry, I gave you guys the early cheat code, but you've seen it. So here we are at a year, and then here we are at 5 years. The reason why we say that is because it's only been in existence since 2019. So pretty much you're getting your foot in, and you're pretty much, your foot is still in at the very, very beginning. There is some risk, of course, because of the fact that when people go back to work and everything else, the time that they spend on gaming gets shortened. But at the same token, I don't see this stopping, because that brings back esports, which we've been significantly missing during coronavirus. So that just brings that market, and I think that with that market coming back, this is going to go higher. My price target for this one, in which that I've been looking at potentially buying in on this one, I can't really trade this one on option because they don't allow it on option, so I have to be an investor here. My price target for Hero is about $40 to roughly $50. I know that that's a huge gap, but given the sense that it just started in 2019, the sky is the limit. But yeah.
Quick question from Lakeisha. She wanted to know, do they charge up front to use margin?
No.
They simply just match what you put in, right?
They match what you put in, but then when they make that margin call, then that's when they come for you.
Gotcha. So Linda wanted to know, as far as gaming media, i.e. Roku, Apple TV, etc., what type of growth do you see?
I see a huge amount of growth going through for Apple. I mean, especially given that they have Apple Arcade, that's huge. Because now you just made it available through subscription, and you're starting to see a lot of companies go this way, where they focus towards subscription. Nvidia does the same thing with their GeForce Now service, where you can literally just game through the cloud. You see it through Google Stadia, which, I mean, they're still not that great, but I mean, things can get better, and if anybody can make it better, it's definitely Google. I think that, when you look at the companies that are within the portfolio, though, that's where it really starts to shine. And that's why I said you're looking at companies like EA, which also has companies like Madden, FIFA. I don't think that they're ever going to bring NBA Live back, but that's Take-Two Interactive, and they got NBA 2K on lock. There's a new Grand Theft Auto that will be coming out next year, which, for anybody that has paid attention to Grand Theft Auto, that's still the highest grossing game on any console.
Wow.
thus far. I think in their first week of sales was $1 billion for that game. And since then, the game released, I think in 2012 or 2014 or something like that, and they're still grossing just through their Grand Theft Auto Online. So Red Dead Redemption did well, but not as good as Grand Theft Auto. You have companies out there like Ubisoft. So I mean, like I said, the sky's the limit for the gaming community. That's not even including, say, for example, League of Legends and all that other stuff.
Go ahead, Britta.
Oh, are you sure? Okay.
Yeah, go ahead.
I have a question, just because you threw out for Hero your forecast of 40 to 50 bucks.
Mm-hmm.
I try to estimate intrinsic value on like dividend stock.
Mm-hmm.
I use the classic formula from Benjamin Graham that he taught in the book The Intelligent Investor.
Mm-hmm.
But you was able to just bam, he was like, yep, this is going to grow to 40 to 50. And I'm like, how are you coming up with that number? Because that's money in the bank right there for anybody who's looking at these different companies and being like, yeah, there's a discount here that, yeah, I'm buying this at 20 bucks, but this is going to possibly grow to $40 to $50. How are you doing that calculation?
So first things first, what we got to look at is, one, it's a new position. So and the other thing that I looked at was when Hero first came to the market, it was only about maybe 5,000 in volume. Now it's grown from 5,000 in volume to roughly 20,000. I think the 10-day average is about, well, no, that says the average volume here is at 78,000. So I'm wrong there. So it's significantly grown. The other part that I'm looking at is, say, for example, I'm not even looking at the stock really. I'm looking at the stocks in which that are inside it and what their weighting is. Mm-hmm. And when you look at, say, for example, how their weightings play out. So, for example, when you look at EA inside Hero, that's probably the biggest weighting in there, I think at roughly about 8%. And when I look at what EA can do over the next 12 months, that's a major opportunity. And then when you calculate that into, like, let's say, for example, for every 1% that EA grows at, and then that's an 8% move, say, for example, within Hero. Now, of course, you have other companies that could potentially offset it. Your typical ETF typically grows about 20 to roughly 30%. But when you look at the tech sector, they grow anywhere from 30 to roughly 40% year over year. So that's why I said it's like a company like this or an ETF like this, I see a lot of opportunity and they're just getting started. I mean, and then looking at where they were, say, for example, when they first started, here we go. So when we look at where they first started here, they were at 15 bucks. And that was when nobody knew anything about them. Now they're putting them, and keep in mind, this is, if you take into consideration, where will we be without coronavirus? Because this is all coronavirus right here. If we take into consideration where we would be, because this is the discount in which that somebody's buying. And anything that you see here, I mean, you're technically getting at a discount, because if we take out coronavirus, we would probably be somewhere, I would say, at the $20 marker, probably at this point in time around April. And then at from the $20 marker, we'd probably be at 25. So that's why I said you have to take into consideration the discount.
Mark,
that's money. Dropping gems over here.
Let's move on to the next pick.
Okay. And I said
ARK.
Oh man, I wanted to say that one for last.
Well, then go with a different one then.
What's the other one? What's that?
What about Qualcomm?
Oh, for sure, Qualcomm. We got to go with Qualcomm. So I was actually explaining this the other day to one of the folks that I advise, and they were like, well, I should go with, like, say, for example, Ericsson as a company in which that I should invest in. Huh?
Sure.
Huh?
Sure.
I was trying to give a story to set it up, but now
we got to see the visual.
You guys are turning me into the Black CNBC. I feel it. So this chart right here looks ugly, and again, we're starting at the 5-year. But so here's the let's roll back the clock a little bit. I mean, Qualcomm is pretty much in almost any. I think Qualcomm is in any cell phone that you literally have that's out there in the market. Now, of course, Apple's making a huge run to literally make its own chips since they bought out Intel's pretty much their modem division to pretty much make their own 5G chips. But will they be ready? I mean, when Apple bought them, I don't even think Intel was ready then. But when we look at how Qualcomm how they're literally just setting the stage for 5G across the board, like put this into perspective. What's the second best selling phone in the United States? I'm gonna do a Shannon Sharp real quick.
What is it, Samsung?
I thought it was Samsung Galaxy.
It is Samsung.
Model of iPhone.
Now here's the funny thing. Samsung is the second best selling smartphone behind Apple in the United States. Now, did you guys know that Samsung technically makes its own chip for its Samsung device, but that chip cannot be included in any phones sold here in the United States? They have to go with Qualcomm Snapdragon processor.
No, did not.
Hold up.
Oh, okay.
That Samsung Galaxy Note, that Samsung Galaxy S20, and all those other budget devices that are in the Samsung family. When you think about, say, for example, the OnePlus division, when you think about Motorola, when you think about anything Android, when you think about their tablets, they're Qualcomm. When you think about also some iPhones that are out there, they're also sold with Qualcomm chips because of the fact that they just do it well. They also do it well as it pertains to graphics as well. So when you think about who stands the best chance, and they also got into just recently, they also got into laptops to provide cellular chips as well. And mind you, we haven't really been able to really see the full breadth of those yet because of the fact of, how Cardi B pronounces coronavirus. I mean, when we look at this 1-year chart, we ain't looking for nothing but space and opportunity. Now, of course, let's talk about some risk here. Now, this stock has been a little bit choppy in comparison to its counterparts. And when I say its counterparts, I mean it's compared against pretty much 3 other companies. That's Intel, that's Nvidia, and that's AMD. So let's just take, let's look at in the realm of things, let's just do Intel. Now, mind you, Intel doesn't really play really much into this space because of the fact that pretty much they provide the processing chips. So they're not even anywhere near focused towards the modem chips, but just imagine those modem chips being involved into MacBooks or those iPads. And I think currently, if you're using an iPad cellular, then you are using a Qualcomm chip, just as a heads up. So that's why I said it's like, that's major in what they're doing. And as we know with 5G, I mean, any 5G device, and we're just getting started within the 5G landscape of things, that's advantage Qualcomm all day. Because most of they're pretty much helping write the standard for what 5G will be. And so when we look at, let's say, Intel versus Qualcomm, it's kind of like the tale of two of the same company versus it's Qualcomm and Intel, but then versus, I mean, of course, you have your AMD and I'm only just pulling these up so that way you can see like the differentiation between those versus the top performers within the sector, and that's these two. They're just the heavy hitters of the group. And as you can see, Nvidia is probably outperforming all of them currently right now.
All right, so next, talk about Uber.
Of course, I'll pull up the chart. Hold on. All right. So we got news today from the Newswire that Lyft actually just reported some of their rider share is coming back. Now, one of the things that Uber does very, very well is they built a great logistics platform, a good logistics network for like its freight. Now, I know that they're selling that off, so we can't really fully count that yet. But I think that when we're looking at what they are going to do, and say, for example, after they acquired, I think it's Grubhub, that we're really discounting exactly how huge this market is in comparison to your current restaurants. I mean, what's keeping restaurants alive right now is, you know, your Uber Eats and your Grubhubs, your meal delivery services. Uber takes over Grubhub. What Grubhub does very, very well, and how they pretty much brought in all those different restaurants into their platform. Now, of course, Grubhub's platform is probably terrible in comparison to Uber's. But what Uber does so well for both delivery as well as pickup, I mean, they just literally are changing the game silently. And with us coming back, I mean, the funny thing that I say about like what COVID-19 is doing is that, you know, you have a lot of folks that are going to be like, I need to get out of the house. I need to do this. I want to go back to a restaurant. I want to, you know, do this. And then give it, like I say, give it 2 months. Give it 2 months, and then they'll go back to ordering their Uber Eats and their food and wanting to have it delivered to them, or having it delivered while they're at lunch breaks and everything else. They'll go back to their normal ways of life, and pretty much it's going to be Uber. I think that is going to make a smart decision in getting rid of its autonomous sector for now, and probably maybe partnering with somebody else, though that it's not official yet. I think it's the best move for them. If they don't, I mean, they're going to have a lot of hill to climb, but I mean, this one's kind of like a no-brainer to me. I mean, this one was pretty much, this stock was well on its way. If you take away the scandal, and if you take away COVID-19 scares away from their delivery or away from their rideshare service, I mean, Uber was definitely on its way. As we saw it peaking at 52-week highs. If we look at it over the last 6 months, we were sitting at 52-week high levels. If we look at it from, say, for example, pretty much not that long ago, which is, it's only been in existence for a year. It IPO'd at 41, came back, and then it was on its way, but coronavirus. But as you see, it's more like that. I wouldn't say it's a V-shaped recovery. I'd say this is more like an L-shaped recovery. So when you look at it over the next 2 to roughly 4 years, this stock will probably be trading at roughly 55, almost $60 a share, easily.
So this is a long-term hold, is what you're telling us? Well, somewhat long-term.
It's a somewhat long-term hold, because they still have some things that they need to work out and fix. The Travis Kalanick, and you know, he definitely did a lot of things as it pertains to pushing the company to move forward, but the company suffered as it pertains to culture, as you probably see in the article right there. But what Dara has brought to the company, he's brought a delicate balance of kind of like that Travis in the sense of innovation side, but then also bringing in Dara, which is that, okay, we need the leadership with that together, and him moving this company forward. I think that the sky is the limit for them.
No, let's.
Well, wait, hold on. The sky is the limit, along with a few other acquisitions that they need to also, you know, take in order.
Okay, there we go.
All right, moving on. Let's talk about my little baby SMH.
Oh, the chip stocks. I mean, well, if you take everything in which that I said about Qualcomm, and then you throw in those other 3 players alone, along with, say, for example, Taiwanese Semiconductor, which from what I hear, they're bringing a manufacturing plant to build here in the United States. That's huge, because a lot of companies are looking to get out of China, though that's going to be interesting. But they're looking to get out of the China sphere of manufacturing. And I think that that's going to be an awesome opportunity for semiconductors, especially to have them made here in the United States, along with in other places like Vietnam. I think that it would make the technology that's going to be built cheaper, which for any investor, when you see something that is cheaper to make, that increases profit margin. So let's look at, say, for example, a company like Apple. Apple relies on, say, for example, using AMD and Intel. Their manufacturing costs to build specific chips, and they're able to take a piece of that chunk in their logistics and bringing their price down. I think Apple's already at what is it, a 65%, almost 70% profit margin in almost every device in which that they sell. That just only increases for them, which makes them even more profitable. And what we investors like in the end, the bonuses, or I guess I should say to our dividend investors. If you're a value investor, this could be possibly an interesting play for you, especially since you kind of want to have, you kind of want to play in that same pond as it pertains to having that dividend, but also have that beautiful growth as well. SMH can possibly do that for you. I think it probably provides you about 1.5%.
Can you pull up that chart for SMH?
Man, you said it.
Y'all are killing me.
All right, guys. Well, every time you talk about something, you gotta pull up the chart.
Here we are.
Yes.
Well, here's SMH, and as you can see, we're pretty much coming close to those highs, and I think that we're going to blow past those. But that's a 2-year. Here's a 1-year. If we want to pull up a 5-year, here we are 5 years later.
But honestly, I want to know, like, what is slowing SMH down, like, currently? Because
well, you just see some of the liquidity. You just see a shuffle in liquidity. You see folks that are running to value stocks because of the fact that a lot of value stocks are cheap out there right now. You see a lot of, like, for example, Boeing is too cheap to look away versus, say, for example, sitting at close to a new 52-week high for SMH. Now, will SMH reach that 52-week high? Yeah. If you're a person that likes options trading, SMH is also a good opportunity for you there. It's not as expensive as, say, for example, but I always say if you want to do options trading and make money and not have to worry about paying the exorbitant fees of what you would pay for a singular stock, then doing an ETF trade option on the ETF is the best way to do it any day of the week. But yeah, I like SMH because of the fact that I like Intel, I like Taiwan Semiconductor, I like Qualcomm, I like AMD, I like Nvidia. I also have to throw in a company called Micron. So when you think about all those, you think about great companies doing what they do so very, very well. Yeah.
So I have a question for you, Mark.
Hit me.
So when I look at companies that I'm looking to buy, like I mentioned Coca-Cola, I also had written down Intel. Just when it comes to value and dividend buys, they're as you mentioned, they're a solid company, and they're selling at a more than 25% discount. So they're definitely something that I said, you know what, I need to get to at least having 100 or something shares of this. You also mentioned, I believe the ticker symbol is Nvidia. At least that's what I wrote down.
Nvidia?
Yep. I love their company. Not only because of, I love them. I love their CEO, but I also
This is like the man.
he is the man. But I also love the idea of what he's doing with data centers, just because of how it backs big data and self-driving cars and AI. But looking at that company here, we know that they don't pay dividends. If I look at the dividend yield for this ETF, it's very low compared to if I just went and bought Intel. So what kind of strategies would you suggest there? Because what I'm thinking is go ahead and just go buy Intel, but maybe do an option trade on AMD or NVDA.
Well, those are things.
That's what I'm thinking right now.
I'm gonna be real with you. Those trades are gonna be very, very expensive.
Okay.
So I noticed I'm seeing a delay in my video. So if anybody can see that, tell me if I'm showing up a little weird here. But yeah, looking at that, I think that when you're looking at, say, for example, an NVDA, especially when they're kind of like coming up, I think that this stock is definitely going to break out. Is very, very evident. Looking at Nvidia or AMD, they're just too expensive just to trade on the option. It's just not going to happen. But if you want to have that, and also if you want to have that ownership where you can have, say, for example, of multiple, but also have a better dividend opportunity as a value investor, then go with the ETF. You can have the best of both worlds where you still get that growth because, make no mistake about it, SMH does grow. I think there's another one called XSD, which is pretty much similar to SMH, but it removes some of the crappier non-performing chip stocks out of the way, and makes it a little bit more balanced within the portfolio. That also gives you a good dividend, but also it gives you phenomenal growth as well. But if you're looking to play the option, I would say SMH is probably the better one because it gets more and more volume and juice play, which means that if you're looking to sell that option for, say, for example, a nice profit return, SMH would be your best.
Okay, that's what I was looking for. Just because I know I'm going to go and buy Intel just because I can't beat up that price and the dividends that they're paying out right now. At the same time,
I don't think that Intel is going to be paying out a dividend. Last time I checked,
they pay out dividends. They've been paying out one for at least the last 5 years. Well, when I say 5 years, that's executive growth in their dividends payout.
Oh yeah, yes. That was true. That was true.
But
keep in
when
mind,
it
the
comes,
return on equity is about 30%. So just be advised.
Yeah, that's the risk there. I was like,
yeah. I was gonna say I'd be remiss if I didn't tell you
that. But at the same time, I was like, all right, there's got to be a way that I could at least trade on an option to get that short term. And when I say short term, that
if you want
2
that
to 5 year profit,
then the option trade is the best play to go.
Definitely.
I mean, if people want me to pull up the Intel trade real quick. So they're pretty much all sitting at the same, kind of like at the same place. I mean, that's a 5 year, so let's come back down to earth a little bit. So pretty much we're sitting at about when you're thinking about that, that's like about a 6-point bump. A 6-point bump in Intel. I mean, they're gonna blow past this one fairly soon. Yeah. And keep in mind, they're gonna blow past it, meaning that they're gonna probably reach a 72, 73. On an optimistic side, 70 for sure. So when you really think about it, it's more like an 8-point bump in the stock. Now, if you're looking to hold on to it for a longer period of time, then do it. But be advised, there are some muddy waters out there for Intel because there are a lot of other companies that are creeping up to take its lunch. So I would just be careful there. But yeah.
All right, our final trade of the day. We're kind of blowing past our time, but we really want you all to have.
And keep in mind, these are investments in which that you can make tomorrow.
Right.
So, or if you want to play in the aftermarket, have fun, go mad. My favorite company or favorite ETF is the wonderful ARK. ARK Innovation. If you do not have, or if you haven't thought about ARK, or if you've always wanted to own Tesla, Square, PayPal, all in the same portfolio, then look no further. They also have Illumina in there, which is a phenomenal company. Yeah, ARK is just kicking ass and taking names in the ETF sector. For like a lot of folks wanted to know, like, okay, hey, how is it that I can own Tesla without having to pay the close to $900 price tag? Well, here you go. The stock hasn't been in existence for too long. It's been around since really like 2016, but not really heavy. It's still fairly new and just really getting out there thanks to companies like Tesla. And I think that the sky's the limit when Tesla gets added to the S&P 500. But Tesla is the highest position in this one. So if you want to own Tesla without paying Tesla money, then ARK is the way to go because it represents 10%. The second best company is Illumia, which is 7.9, roughly 8%. And then you got Square at 7%. I mean, that's a heavy hitter top three right there. That's not even including what they have in there, which is Proto Labs, Roku, CISPR, Invitae. So it's pretty stacked. And I think that sooner or later it will get to a point of dividend. I think it's just too new right now. But if you're looking at owning such a position and being able to just sit back and watch it grow, ARK is definitely that company, or is definitely that ETF. And I think that as more IPOs come in that are considered innovative, they're very good as it pertains to choosing what gets added into the ETF. And yeah, I mean, just phenomenal ETF. And it's, if you're looking to trade something on, say, for example, option, they're just as affordable too. So because of the fact that they're still new. But I think their average volume, instead of me saying I think, so its volume that it's now trading today, it traded about 1.3 million shares. Its average is less than 1 million. So as that grows, when people start realizing that ARK is that ETF to play with, I mean, this is one of those ground floor opportunities.
We have a question from Naja. She says, I have a portfolio that I only contribute to. I make no decisions regarding where my money is divested. How can I begin to manage it myself?
All right, so I'm gonna take myself off at this chart so that way I can be here for y'all. All right, so what was the question again? I'm sorry.
I have a portfolio that I only contribute to. I make no decisions regarding where my money is divested. How can I begin to manage it myself?
Fire the person who's managing it for you and literally just move it over to your own IRA or wherever. If you're in an IRA or 401k, move it over to your own IRA and then literally start investing for yourself. The reason why I say that is because sometimes people will find themselves in positions where their portfolio grows about 7% for the year, which, I mean, let's just be real, that's poop. Because of the fact that, you know, if your portfolio is growing at 7%, but yet you have companies out there that are killing the market at, you know, 30, 50, sometimes 200%, like your Zooms, you're just sitting here just, you know, that's just unfortunate. So I would strongly suggest you setting up your own portfolio. Definitely going back, if you haven't watched any of the videos that we have done, definitely go back through and watch them, because we're giving you a lot of fundamental data there, especially within our conversations. Yeah, I mean, the best investment that you're going to make is, you know, learning to do it for yourself versus having somebody else do it for you and treat you just as a commission check.
All right, so we have one last question before we say good night for the evening. And this comes from Lily Ray. This is for both of you all. When you decide to invest in a company, is there a minimum amount of shares that you try to purchase as part of your investment plan? Just a rule of thumb for any of you, she wants to know.
I'm gonna let Britta take this one.
I do have a minimum that I try to shoot for, depending on the company that I'm investing in. So I mentioned the first company I bought, or one of the first companies I bought, was Costco. But I was buying them when they were $86, $82. Since they were a fundamental company, I knew their business model. I shot for a minimum of 100 shares. But once again, trying to hit that type of money comes down to how you are, looking at your financials, of being able to say how much a month can I put aside to actually hit that. And then two, it really comes down to what companies that you're trying to hit. Like AT&T, definitely all the way, I would say, try to hit 100 shares. Even the Hero one that you mentioned, automatically I'm going to try to hit 100 shares if I go and try to buy that company.
Nice. I would say for me, you know, I look at when it comes to picking winners, I'm looking at it in the sense of, you know, I relate a lot of my winners to sports. You know, I got positions in the game, and then I got positions on the bench. If you ain't playing your position well, then you're gonna have to sit the bench for a while and then figure out, you know, what you're gonna do with your life. And if you can't do that, then I'm gonna have to remove you off the team. So I look at it in the sense of, you know, what companies are winning. The amount of shares that I typically buy on average, probably the very base minimum that I'll probably buy is about roughly 10,000 shares. And that's because of the fact that if I'm moving money into something like that, then that means that I truly believe in it. But yeah, I mean, like I always said, pick your stocks like you pick friends. And if you have great friends around you, then honestly, it shouldn't be that hard to pick stocks. And if you're a sports person, then pick winners that you know that are like solid. Not like just don't always just pay attention to the stock, pay attention to the company. Because the stock is really based upon, say, for example, what everybody else's perception is that day or that month. The company itself, they can't lie about, well, unless you're Luckin Coffee, they can't lie about, say, for example, their report card. And when that report card comes due it's like 4 times a year, we get to see, okay, hey, who was a straight A student and who was not. So I guess that's the best advice that I can give you. Pick your stock like you pick your friends and pick winners.
Yeah, and to piggyback on that, I don't know how many people actually read the annual reports, but they do have letters in there to their shareholders. That's a great way to hold people, and when I say people, it's the CEOs and the boards that's running those companies accountable. Like for instance, I looked at Microsoft and I said, what is Microsoft doing in 2019? And what did they say they were going to do in 2019? And actually, are they actually doing it in 2020? Mm-hmm. If you look at what they said that they were doing, there's the kind of language that they use, which is like every company has to be a tech company, and being able to put out multi-year cloud agreements, as well as growing momentum around these tech companies. When they say tech companies, it's really their tech stack as infrastructure as a service and AI. The things that they said that they was doing in 2019, if you look at what they delivered in Q3 of 2020, they grew, they did what they said that they would do. So I would take that into consideration on top of what Mark has said, is look at what they said in their letters and look at their balance sheets, because those are going to tell you if they're delivering on what they committed to.
Yeah. And these are huge come up opportunities for everybody. I hope that people like to really take into consideration what they just received today. You got to hear, I mean, which is rare when I hear value investors, you got to really hear like a true essential value investor that actually picks stocks that actually make sense versus, I mean, some of the folks that you watch on CNBC is like, for real? And then they have to, like, it's worse when you really have to sit there and watch somebody explain a loser. So, I mean, you guys got the best of both worlds. You got it from the trading perspective, you got it from the growth and momentum side, as well as you got it from the value side. And then on top of that, the key thing that ties them all together is paying attention to the fundamentals. So, good show, y'all. Good show.
So with that, y'all, I hope you all got all your notes ready, and we'll come back on Thursday. Let us know how this 5 p.m. time is working. We're playing with times to try and, be accommodating to both West Coast and East Coast. So let us know. And remember to join us again on Thursday for the hot take, and we'll talk about the news for the week and how it impacts your money. So with that, good night.
I'll see you all.
So much, Britta, for being with us today.
Thank you.
All right, y'all. Have a good night.